Yeah, good morning, everyone. So yesterday we saw US market decline as was indicated by the futures yesterday. Uh, that was mainly led by a few of the company results like Walmart and all, which has put pressure on the prices of large retailers, and the stock came off, and that has led to decline in the overall market in the US. But futures are comparatively positive today in the US market. But today we have Fed meeting in the evening, which may have a major impact on the market. The key thing is to watch is first of all the rate increase. The expectation is 0.75% increase in the rate. But the key thing will be how Fed is taking from here onward, whether they are indicating further increase of 0.75 or 0.5%. That will be the crucial, and how is the commentary of the Fed will also be crucial for the market in the coming days. Apart from that, Asian market taking clue from that yeah, are comparatively down. Dollar index yesterday has shown some up move, which is leading to some profit booking in Asian markets. Uh, Metal markets are more of oil. Oil has come down. Yesterday it went up to around 107, but today it is hovering between 104 to 105, whereas aluminum is up by around 0.5% and copper is flat. Iron ore is also flat and steel is down by around 0.5%. So not much activity in the on the metal side. Sugar prices has come off sharply in last few days, and now it is at around 5 month low. So international sugar prices may put some pressure on the Indian sugar prices or the stock as well, as next year again, if the crop is very high and we need to export it, then it become difficult to export at these prices, so may have some pressure on the sugar stocks. Now I'll request technical team to take up from here.
Yeah, thank you, sir. This is Nirav here. I'll take the derivatives thing, up first. See, on the derivative front, there are two, three things that one needs to note. The PCR has fallen below the one levels, which is a negative. From 1.45, 1.5 odd, it has come down significantly. Open interest has come down as well. So, there is liquidation taking place. Also, the VIX has risen from 16.8 odd to about 18 plus, and moving up consistently. So these are negatives, and likely you will see some amount of selling pressure below the 16,500 levels. We have closed below the 16,500 levels. If Nifty sustains below this level, you will see some more selling coming in, which can take the index lower towards the 16,200 to 50 levels, which are the support areas. With the expiry coming in, we expect very volatile, 2 days for the index. Um, Above 16,600 levels, you will see some more buying coming in, but looks like for the next couple of days, this 16,600 level might not be broken. um, from the stock specific front, there are stocks which are seeing some short built up during the rollovers as well. So banking as a whole seems to have taking profit booking. There is profit booking across the board in banking sector, and very likely you will see some more selling coming in into this sector. So look out for the same IT sector, even though in the last trading session some good amount of selling has gone in, but I don't think there will be very aggressive selling coming here. So I think these stocks will recover soon, and one should be buying near the lows for this sector for a good 3 to 5% gain from a trading perspective. We like Wipro, in this sector. A good formation has been made in this particular stock. That's it from my side. I'd like to ask the fundamental team to take over, please. Sorry, the technical team to take over, please.
Yeah, thank you, Neerav. A very good morning, everyone. This is Ayush Mehta. I'll be covering the technical part for the day. So, taking the cues from the global market, SGX Nifty is around 2 to 3 points down at the moment. So, we feel Nifty is expected to open on a flattish note and likely to witness sideways movement in the day. So, we have seen a sell off in the first half of Nifty in yesterday's trading session. There was a slight recovery, but it could not sustain. It could not sustain and it closed near the lower levels, and it also broken 100 DMA on the closing basis, which was placed at around 16,520 levels. But there was an immediate gap support in Nifty. But there was an immediate gap support in Nifty, which had taken yesterday at around 16,480 levels. For today, immediate support for Nifty is placed at 16,400. And if selling intensifies, the next support would be 16,330, followed by 16,250 levels. If there's a buying from lower levels, then immediate resistance for this index is placed at 16,570 to 16,650 levels. Moving on to Bank Nifty, the index was unable to hold itself above its 200 DMA and have witnessed a selling pressure from the higher levels. Technically, the immediate support for this index is placed at 36,100. Any move below the same may drag this index towards 35,850 to 35,550 levels. If Bank Nifty again witnesses buying from lower levels, then immediate resistance is placed at 36,650, followed by 37,000. Nifty Financial Services, for this index, immediate support is placed at 16,370, followed by 16,300. And immediate resistance for this index is placed at 16,520 to 16,600. Moving on to the stocks, we feel Coal India is looking good at current levels. One can buy Coal India at current levels for a target of 210, the stop loss of 196. We have already initiated a buy call on this. That's all from my side. I request fundamental guys to take the call forward.
Good morning. So out of yesterday's results, the one which stood out was Ujjivan Small Finance Bank. The result was above expectation. We already had the Q1 update where NPA had witnessed a good decline, and further credit cost for the quarter was 0. Also loan growth was healthy at 38% year on year, and because of that the bank witnessed a decline in cost to income due to operating leverage. Thus, due to all-round good performance, the ROA came at 3.4% and ROE of 28%, which was way above the street expectation. We think that on a sustainable basis going forward, the ROE of 1.8% and 18% is achievable. We think the stock offers a good risk reward with good performance now behind, and stock still available at very cheap valuation of 1.2 times trailing book value. We feel it can re-rate to close to 2 times going forward. So we are positive on Ujjivan Small Finance Bank. Aditya Birla Sun Life AMC result has declined. Revenue, EBITDA both declined by 6% sequentially. AUM also declined by 5%. Which is slightly more than the industry decline of around 3.5%. So company continues to lose market share. One can avoid the stock. UTI AMC also result was okay. Revenue declined by 3%. EBITDA grew 20%, but that was because of some one-off lower OPEX during the quarter. On the AUM front, it was flattish quarter on quarter against 3.5% decline for the industry. But one has to have a closer look to understand why the AUM was flat. It was mainly because of growth in the liquid funds, which is a low margin product. Whereas if we see the equity funds AUM, that has declined. Also UTI lost market share on the equity AUM. So that is why we are neutral on UTI AMC. South Indian Bank result continued to remain weak. The slippage ratio increased to 2.8% versus 2.3% in March. And as a result, the GNPA and net NPA also increased quarter on quarter. So one can avoid a South Indian Bank. Thank you.
Good morning, everyone. Wipro has announced a 5-year strategic engagement with Nokia to drive digital transformation and efficiencies in global business service. The deal size is not known. This is positive to Wipro. Tanla platform had its con call yesterday, wherein lower margin is the main concern for the company, which came in at lower EBITDA margin was the main concern for the company, which came in at 16.3% versus QQ of 21.6%, for which management indicates upgradation of current infrastructure has caused short-term impact on EBITDA. Other than this, the company is one of the large customers where they were getting significant volumes were quoted lower pricing by the company's competitors. So the company decided to scale down its volume, uh, which had led to lower margin. However, management expects to get back to operating margin at around 20% in next few quarters. Outlook is near-term negative. KPIT Technologies posted results in market hours, and the company has posted in line with expectation set of numbers for the quarter. And the company has retained its FY23 guidance of revenue growth of 18 to 21% and EBITDA margin of 18 to 19% for FY23. Outlook is neutral on the company. Thank you.
Yeah, good morning. Indian Metals and Ferroalloys reported improved set of numbers. Revenue came at 743 crores versus 757 crores sequentially. EBITDA came at 228 crores versus 191 crores sequentially. The main reason for increase in EBITDA was a reduction in the employee cost. Margins have also improved from 25% to 31% sequentially. Stock is trading at EV by EBITDA of 2.4 times on trailing basis. Maharashtra Seamless had its con call yesterday, wherein the company had reported the best ever EBITDA, mainly driven by supply constraints in Europe, which aided demand. Management has guided to maintain its margin of 17% overall going forward, and export margins to be around 30%. Management has guided its seamless tube sales to be around 350,000 ton, out of which 24% has already been achieved in Q1. Company is witnessing good demand from ONGC and Oil India and expect them to generate fresh requirement of 100,000 ton every year. The combined book value, order book value stands at 1967 crores, which will be executed within 4 months. The main driving factor for the growth will be its exports, which accumulates to 32% of its total order book. We are positive on this company. Tata Steel had its con call yesterday, wherein the management has guided its sales volume to increase by 0.5 million ton, though margins will be compressed in Q2. Post monsoons, demand is likely to pick up given steel prices have stabilized. Demand from projects which was delayed seems to be recovering, whereas demand from auto sector too has improved. The full benefit of correction in coking coal prices will be seen from the second half of FY23. The coking coal cost is likely to reduce by $40 per ton in Q2 for its India operations, whereas in Europe we are likely to see an increase of 20 to 30 euro per ton. The company remains confident for its European business to deliver robust performance on the back of Netherlands and UK operations. However, gas availability and higher energy cost remains a key concern. We are neutral on this company. Thank you.
Good morning. So Bajaj Auto announced its results. The results were ahead of expectation. Revenue came in at 8,005 crore against an expectation of 7,865 crore, which grew by 8% on a year-on-year basis. The management said that the sales in the quarter were significantly constrained by the inadequate availability of semiconductors, although the situation improved in the latter part as new supply sources were developed. The company sold more than 9.33 lakh units during April to June period of this year against 10.06 lakh units sold in the same period last year, with two-wheeler volumes falling 6% and commercial vehicle segment volumes down 19% on a YOY basis. EBITDA margin came in at 16.2% versus an expectation of 15.4%, which was lower than 17.1% sequentially, but higher than 15% on a YOY basis. EBITDA growth and margin expansion was despite supply constraints, cost headwinds, and a weak macroeconomic context. The company had price increases, and due to better foreign exchange realization and favorable mix, the material cost inflation was offset, and which enabled margin improvement. The stock is trading at a PE of 17.4 times FY24 EPS. Thank you.
From this, a few more results. Super Stop came up with good numbers. In fact, they had reported revenues ahead of pre-COVID level. Revenue increased by around 33% quarter on quarter, and being last year same quarter there was a COVID. The year-on-year increase is substantial at around 370%. But if we compare it with the pre-COVID level, it has improved by 4% CAGR in last 3 years. So that shows a very positive trend, and even the important thing is that the gross margin has also improved and come up at highest in last many quarters. And though the EBITDA margin was more of a flattish quarter on quarter, the EBITDA margin were flattish in line with expectation at 17%. But the key thing is that they had invested whatever the extra earning was there in the gross margin into employee cost and operational improvement. So that's why the EBITDA margin came in line with expectations. But overall gross margin has expanded. It is giving positive indications. And even the valuations, if we see, it is trading at somewhere at around 8.5 times FY24 EBITDA, which is which is one of the cheapest stock in retail in Indian market. Other stocks are trading minimum at around 11-12 times. So that give enough opportunity for stock to perform from here, though the prices are at upper end. But the outlook for the Super Stop seems positive from a near to long term perspective. Then United Spirit reported numbers. The numbers were marginally below expectations. The volume growth was around 18% versus expectation of 20%. The important thing is that Q1 is generally a soft quarter for United Spirit, and we see higher cost and lower EBITDA margin in this. So EBITDA margin came in at 12.6% versus expectation of around 13.5%, and last year 10.4%. So the margin was also under some pressure, but this is being a soft quarter for the United Spirit. The market may not give very high importance to these numbers. Overall, seems like the valuations are also comparatively reasonable at around 45 times FY24 earnings. So they will be coming up with a con call today. So we'll update what is the outlook in the coming period for United Spirit. Then KEI Industry has reported good numbers. We had seen that Havells Cable and Wire division has reported a very declining set of number, and on the other hand, Polycab reported good numbers. So KEI has followed Polycab and reported good numbers and ahead of expectations, wherein revenue grew by revenue came in at 1,560 crore, which was higher than the expectations, and EBITDA margin also came in at 10.2% versus expectation of 9.4%. Share is trading somewhere at around 18 times FY24 earning, which is reasonable. Then Tata Power reported number, and here the number has shown some declining trend and were reporting below expectations. So revenue came at around 14,500 crores versus expectation of 11,400 crores. The higher revenue was on account of higher trading revenue in this result, and which has resulted into higher sales for the company. At such EBITDA, if we see absolute EBITDA has come lower, though the EBITDA margins looks quite low, mainly because of high trading revenue. But the absolute EBITDA has also come lower than the expectation at around 19,600 versus expectation of 2,250. So overall result seems below expectations. Now results for 29th. So Ashok Leyland is likely to report number here. We already know the volumes. Volume has quarter on quarter. Generally, fourth quarter is very strong quarter for CV companies. At such volumes, we will see some decline quarter on quarter of around 19%. And last year, the base was quite low. At such, the volume has increased by around 128% year on year. The key thing to watch is the EBITDA margin, and EBITDA margins are likely to come off quarter on quarter from 8.9% to 6.9%. Even if we see their yearly EBITDA pre-COVID EBITDA margins in the Q1 was at around 9.4%. So margins are expected to be lower on account of higher material prices. So result is more of a okay, as the outlook for the growth of the truck industry is quite strong in next 2 years. Then Cipla likely to report declining numbers, wherein year-on-year revenue is likely to decline by 1%, but EBITDA margin is likely to come off from around 24% to 20%. Then Exide Industry is likely to report number. Here the results are likely to show improvement, wherein revenue growth of around 37% year-on-year, and EBITDA growth is of around EBITDA increase of around 42% year-on-year. The margins are likely to show marginal uptick in this quarter. Pre-COVID revenues are likely to increase by around 7% CAGR in this quarter. So all round looks improvement result. Then Indian Oil Corporation is likely to report number, and here the results are likely to show declining trend, though they will be earning a handsome profit in the refining margins, but the retail they will be losing money, and that is likely to have a negative impact on the performance. So result will be declining. Route Mobile is likely to report number. Here we had the expectation is that will show a good growth, but we had seen Tanla numbers are quite poor, so need to be careful in Route Mobile as well. Then Sun Pharma is likely to report number. Here the numbers are more of a okay set of number with revenue growth of around 6% and EBITDA margin may be coming off a bit from last year of around 28% to 27%. Torrent Pharma is again likely to report okay set of number in this quarter. So that's all from us. Thank you very much and have a good day. Sorry. Let the commodity team take up. Sorry for that.
Yes, sir. Thank you. Hello, everyone. Today, copper and crude natural gas commodities should correct a bit. One can wait for a pullback and sell. Copper maybe should be sold at 630, 637 levels with a stop loss of 642. Prices again could test 628, 25 levels. Again, on 622 levels, it could be attractive for a pullback to buy with a stop loss of 616. Crude should be sold around 7700 with a stop loss of 7770. Again, prices should test 75, 75, 50, 75 levels on the downside.
NG, we had witnessed yesterday a huge fall in evening after a rise. So maybe there is a chances of a reversal, and it is recommended to avoid long positions at this moment, and could sell around 705, 710 with a stop loss of 718. So overall, it again can test 685 levels on the downside. So avoid long positions as of now. Correction is expected in this. Apart from that, gold and silver yesterday had witnessed a very narrow move. Gold was trading around, trading in a range of 50,700 to 400. So again, tonight we have this aftermarket Fed meet, and that's why we are expecting a range bound movement. So we'll wait and watch and uh, take clue from this Fed meet. So trading in intraday is recommended for the day, as the aftermarket this Fed meeting is there. So that's it from me. Yeah. Ria can take over.
Yes, yes. Thank you, sir. Good morning, everyone. So let's look at the currency. So dollar index has already shot up. Uh, if you look at the dollar index, it is now trading at 107. Of course, this is the effect of this is the FOMC effect that we are seeing into the dollar index. So the expectation is that the Fed could go for a rate hike of 75 bips. 100 bips is something that is right now market has moved away from. The another important numbers will be the US economy numbers, which is scheduled for this week as well. The expectations for that is that it will again come in the towards negative side, and we could see the second quarter in for the US economy going into contraction again. Now, if you look at the other data, there is already signals that the US economy is showing the slowdown signs. Like housing sector is showing cool off, where we have seen the new and pending home sales data falling sharply. Consumer confidence have fallen sharply from 98.7 to 95. The two ISM and PMI numbers have also witnessed downside. Now, the two important factors that was there for the Fed to to go towards the rate hike was the employment numbers and the inflation numbers. Now the employment numbers is already taking a hit with layoffs happening in the tech companies, as well as the unemployment claim data edging upwards. For the inflation, I think the headline inflation might have peaked out, but the questions of whether it will plateau or show a downside still remains in the question, because the core inflation is still remains sticky due to the high utility bills, food inflations, and natural gas again edging up. So overall outlook for the Fed will be they'll go forward with the rate hike and will maintain the range of 2.25% to 2.5% as far as their repo rate goes. They'll commit to the 2% inflation, but will also acknowledge that the US economy is heading towards the slowdown. Um, for the next meeting, I think the tone of the for September meeting, they'll set the tone towards 50 bips rather than 75 bips, taking into consideration the two negative numbers, US economy posting two negative GDP numbers. So overall, dollar index will continue to give a strong hold, because I think the recession fears still persist into the economy. The commodity prices have still not cooled off, to the levels that was there before the Russia-Ukraine war. And I think the range that it will maintain will be 105 is the base in the dollar index, and the highest it can go is 109, 110. For the Indian rupee, I think the same will be reflected. As long as dollar holds the stronger ground, the appreciation would be limited. towards 79.60. That's it. Today is the expiry, and thus we could see some uptick movement into the Indian rupee. For the August contract, it could head towards 80.18, 80.32 in the intraday sessions. Support that you can go forward with the Indian rupee is 79.95. For the euro and pound, I think it will be a little gloomy day because the pound is already in a turmoil with the both leadership plans that we are seeing into the country. So I think it will remain on the with the sideways momentum. As far as Europe goes, the Germany is posting negative numbers, and I think the same will be reflected into the euro as well. It is again likely to test the parity against the dollar. And for the euro INR, you could see the resistance at around 81.55, and for pound, I think it will be around 96.68. So that's it on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.